Okay, so now we're recording. We'll share our screen. And let me know, are you able to see the agenda?
Yeah.
Okay.
Not yet.
Okay, let's try again.
Something's coming.
Okay, you should.
Now we got it.
Okay, welcome. As you can see, this is a 126th one we've done. Been doing this about 15 years or so. Welcome to our meetup, especially to any first timers we have. And would like everybody to look at the disclaimer. Basically, everything tonight is for educational purposes only. I'm not licensed to make recommendations to anybody, so we're here for educational purposes, and everybody needs to take personal responsibility for each of the investments that you do. So what I'd like to do is, and then we're gonna have a pre-announced that we had Reggie step up to the plate, and he's going to conduct the meetups this summer. We'll hear from him in just a minute. And then tonight, Gary's going to share more about the best leverage exchange traded funds and notes and the strategies with that. So let's go to our first poll. And the first poll, which you've all seen many times before, let us know where you are tonight. Just go ahead and vote if you don't mind. Yeah, let's see. I wonder if we have anybody in the waiting room. Yeah, we do. We got waiting room people. So we're admitting those. So we're up to, looks like 54 or 55. So I'm going to give about 30 more seconds, and then we will end the poll and show the results. This will be the first month in a long time we haven't had somebody from overseas. We've had people from Spain and Italy, China, Australia. So we've got 90% participation. So I'm going to end the poll, and you should be able to see the results, I hope. You see it? Okay.
Yep, we see it.
Looks like, counting me, we have 2 people in Alaska and 16 or 36% Pacific, 2 Mountain, 7 or 16% Central, and then always amazing, 40% of our people, 18 East Coast, and 1 from Canada. And so we're doing it an hour earlier than we used to in honor of all the East Coast people that are hanging in there with us. So we're going to stop. I got a chance to look at that. We'll stop sharing there. And then we have a second poll. And it's a repeat of what we did last time. If you wouldn't mind letting us know what your exposure in the market is. So we got really good participation. We're up to 80% of you are voted so far. So we'll give it like 30 seconds and then get going here.
81 to 99% seems to be missed on the survey.
What's that?
There's no option for 81% to 99.
I got 88 now.
No, Floyd, he means for people who are between 81 and 99% invested, there's no option for them to choose. It's a gap.
Oh, look at that gap. Hey, that's a funny one. Best laid plans. That's the second month in a row we've had that gap. We didn't know we had it last month, so I'm going to share the results. Almost 10% of you are 100% are on margin. 14% minimally invested, and the rest are various between 20 and more. So that's just an interesting poll for me. I guess I will just ask a question with no judgment whatsoever. No judgment whatsoever. But those of you that are invested 0 to 20%, I guess the question that you should ask yourself is, what condition do I need to see so that I will do more investing? And so one way to do that is to read the big picture, look at the IBD 50, the big cap 20, the market sector leaders. If you have an interest, IBD Live offers a lot of good information too. So we're going to stop sharing on that one. Thank you for everyone that participated. Appreciate that very much. the big picture. Let's show that real quick. Let's see. I had the big picture up a minute ago and now I don't see it. So let's see. How do we get to the big picture? How did I lose the big picture? Okay, we'll get it real quick here. Okay, now we got it. So let me share my screen now. So go back. And we are recording, got that confirmed. And so, big picture, Dow Jones extends win streak. Can you see the big picture?
Yeah, we can.
Does someone say, yeah? Okay, got it. Okay, so Dow Jones Industrial Average and small caps led the market higher Thursday as blue chip indexes rallied for a seventh straight session. Amid ongoing rebound, the major stock indexes are closing in on a new high. Stock market got off to a good start prior to, as data pointed, a weaker job market, et cetera, et cetera. One thing I wanted to come down and show you is that now we're showing distribution days on the market pulse. We haven't seen those for quite a long time. And here's a little story in the big picture. It says, while there has been no follow-through day yet, IBD's recommended market exposure, it sits at 40 to 60% as the market extends its rebound and main indexes sit about 1% from new highs. Readers may be surprised to see distribution count suddenly back on the market pulse. So you can read this at your leisure. I'm not going to go to read the whole thing, but you can see they say we have two distribution days on the NASDAQ, 3 on the S&P 500. Wanted to just very briefly, I think I have to stop sharing and I'm going to go back and share again. I have to click on a box that now I can't find. Let's see, where did that box go? I want to have sound. So let's see, where do I find? Oh, share sound. Here we go. Okay. So let's go back and see the big picture now.
Yes.
So I'm just going to very briefly play, and I'm going to play it at 125% speed, just a little short clip on today's stock market today. So did you hear music?
Yes.
Yeah.
Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corman-Kentreve here with a breakdown of the action in today's session, Thursday, May 9th, where we saw gains across the board, and the NASDAQ and S&P 500 are once again closing in on all-time highs, if you can believe it.
I know there's this expression, sell in May and go away, and how about buy in May and make some hay? That's what I'm thinking here. Anyway, yeah, good day for the market, not far from all-time highs. I wanted to take a look at Celsius today. CELH reported earnings earlier this week. The revenue comparison's getting a little tougher, but moved above its 50-day moving average today. Also want to talk in the financial area, Manulife Financial, MFC, and finally, retailer Williams Sonoma, WS.
So it looks like we were froze up. So I'm gonna stop that one for now. But I recommend every day you read the big picture if you have time. Watch the video. There's really good information on there. We got more waiting to get in on the meeting. Are you there, Reggie?
Hey, Floyd, can you hear me?
Yeah, Reggie's here. Reggie, go ahead and make your announcement about what are you going to be doing this year?
Okay, Floyd's been crazy enough to hand things over to me for the summer so I can destroy his reputation. Just kidding, Floyd. I'm going to be working on all the work that Gary, Rick, and Floyd have done on the trading use grid. I'm going to share a lot of more detailed back testing year by year so that the viewers can get a better understanding of what they want to do to get a more secure picture of what to invest in, how to invest, whether or not all the factors I want to take into account. That's one of the things I want to do, delve deeper into the trading view strip back testing, profit targets, so on. And that was going to be the first one. The second one I'm going to do is want to look at more third-party websites that offer alternative and additional market monitoring to help the investor make a better decision. If you talked about Floyd earlier, where some people are only 5 to 10% invested or 10 to 20% invested, what would it take for them to get off the sidelines? And those are some of the things that I look at in addition. So I was going to put all these things together, present them to you in 3 separate presentations over the summer. And after the first one, depending on the feedback I get, questions I get, comments I get, I can then modify to include or exclude certain topics as for what the audience wants to hear.
No,
That's
just very briefly, just give us a quick rundown on your background and where do you live right now?
sure. I'm based out of Florida. The next meeting we're going to have is going to be in June. It's going to be on Eastern Standard Time, going to be about 8:30 p.m. Eastern, so it's a bit earlier from what our East Coast people are used to. My background, I'm a retail investor just like the rest of you all. I've been investing for probably about 10, 12 years, but my strategies kept evolving till I could nail down something that actually worked repeatedly. That was always the issue. I tried a bunch of different strategies, nothing worked consistently. And until I stumbled across Floyd's stochastic strategy, which unfortunately was in the bear market for 2022, which was hard on me to actually make any money on that time. But I was able to tweak it, which is what I wanted to share with the rest of the team going forward, is how it can be applied and how it helped me out to clarify things that I couldn't really see and how that influences my investing decisions.
That's great. Thank you so much, Reggie. I think, isn't that June 13th, maybe? Let's see.
Yes, it is the second Thursday in June.
June 13th, we'll be sending out an announcement on the Meetup along with a Zoom link to that Meetup. But as you heard Reggie say, he's going to start 4:30 Alaska time, 5:30 California Pacific time, and 8:30 back. He's going to try that out in June, see how that goes. And then you'll see me back. I may log in and participate a little bit, but I basically take the summer off. You'll see me back in September. So I really appreciate Reggie stepping up. He raised his hand, volunteered. He said, I want to do this. We had a Zoom meeting. And I said, I want to check this guy out. And after talking to him, I go, yeah, you can lead this thing. And I got Amy Smith's approval. Amy is the head of all the meetups. And she said, sure. And so it's exciting for me. I think it's exciting for Reggie, and we'll see how this goes. And stay tuned. So thanks a lot. Thanks a lot, Reggie. Anything else you wanted to say before you sign off there?
No, all the communication will be going through Floyd. All of you guys will be getting emails and Meetup information through Floyd, just as usual. And I'll be handing it to Floyd. Floyd will verify and send it out to you guys. But you'll have all the links, all the timelines, the agendas, and everything in advance, so you can be prepared for the first summer meetup.
Okay. Thanks.
Yeah,
Thanks
thank
so
you.
much.
Reggie, may I ask where are you located in Florida?
I'm located up in Northeast Florida, the Jacksonville area. Okay.
I'm from Tampa, actually. That is why I was wondering.
No problem.
Sure.
Oh, you guys can have lunch.
Yes,
I'll be
How far is Tampa from Jacksonville? Like 300 miles?
about 3.5 hours.
Yeah.
Yeah, it'd be a nice lunch. Thanks a lot, Reggie. So we're going to move on to the agenda now. Gary's going to take over the agenda as our guest speaker now, and he's going to be talking about more than what we covered last month, about what he's done to look at the best strategies for leverage ETFs and ETNs and go into a little more detail on that. So go ahead, Gary, take it away. And you're a co-host, so you should be able to share your screen so we can hear you.
All right.
Yes.
Everybody can hear me. Okay.
Yeah.
All right. Great. All right. I'm going to share my screen. 1 second. Just need to switch things around here a little bit. Oops.
Someone asked about the weather, so you might have signed in a little bit late. We had snow last night, and it's 40 degrees, and more snow is coming.
Yes.
So fun times in Alaska.
In Houston, the heat index was 104 today.
So did you have the air conditioner on there, Rick?
Like the whole day. Still on now.
We don't have air conditioners in Anchorage. Okay, Gary.
Yeah, I'm working on sharing. 1 second. Almost there.
There we go. I see it.
Can you guys see the slides?
Yeah, we got it, Gary.
Okay.
Are we going to get
There we
copies
go.
of these slides?
I'm sorry?
Are we going to get copies of these slides or do we screenshot them?
No, you get copies.
Okay.
Absolutely. Yeah. We'll make the slides available to everybody.
Yeah, when I send out the meeting recording, probably by Saturday morning, we'll send a slide deck with the recording also.
Thank you.
I'm not a fan of doing slides, but we do have some slides tonight because I wanted to illustrate some things and show you folks some things. And sometimes it's just easier to do that with slides. There we go. So this is my agenda, the things that I wanted to cover tonight. And I guess starting off with, I released some new code earlier in the week and sent that out to everybody that is using the strategy currently. The code did a number of things. There were a number of improvements, particularly around alerts. The alerts are working a lot better than they have in the past. And that's one of the things I'm going to show tonight is how to set up an alert, because it's really simple to do. We had an issue before with the strategy had a difficult time recognizing if we had a week that ended on a Thursday because a Friday was a holiday. And so that was a problem. We are now recognizing that holiday. We've got holidays in there, so that will change things up a little bit. One of the things I wanted to make sure everybody understands that is using the strategy is that as I release new versions, a lot of changes take place. So don't necessarily expect the strategy to mirror previous strategies as far as results. In many cases, they will, but not all the time, because we are tweaking different things, and that will change individual trades, change timing a little bit, and sometimes the results will change as well. So it's something that you should expect. And the holiday thing, as far as being able to recognize that, is just one example, and that has actually impacted quite a few things. We have also fine-tuned the buy and hold. We have a buy and hold number that comes up in the strategy tester or the strategy results that are produced by TradingView. And that's not a good number. We found that the buy and hold just did not really equate to what we were doing. So we put that as part of our code in the strategy and now have that displayed in the bottom right-hand corner of the chart, where you get a buy and hold number and also a percentage that goes with that number. And that buy and hold number is based on the very first trade that takes place in the back test up until the end of the back test period. That's what the buy and hold covers. We had a section in the strategy before called add-on buys that we've taken off now. We've removed it because we found that with the way the strategy works and the way TradingView works, we're having a very difficult time trying to implement it in the way that we thought it would do the best good. And we could pursue that at some point in the future. If we do, though, it's going to take a lot of coding. So we're going to have to look at some trial and error example type stuff and try to figure out if it's really going to impact results enough to make it worthwhile to spend money for additional coding. There's a couple of things one thing in particular that's not working in the strategy, and that's we have a trailing stop now. There is a setting for a fixed stop as well, and the fixed stop does not work. That's one of the things we'll address in future release. And let's see, what else? Replay, and I'm going to show replay a little bit tonight too, but because not everybody's aware of it, but it gives you the ability to look back at a period in time on a chart and start trading at that point as if you can't see the days ahead of you or what's going to happen ahead of you. It's a replay mode that TradingView has. That's really very good, but we've got a little bit of a conflict with our strategy and still having a few issues there, but it still works very well for what we want to use it for, and I'll demonstrate that a little bit tonight as well. So that's it on the code, and then I'm going to touch a little bit on our strategy rules. If you look at utilizing this on a real-time basis, if you're going to monitor the strategy on a day-to-day basis, then the strategy will give you buys and sells and alerts and all that good stuff. But a lot of times it helps to understand if something is coming up. If you're approaching a place where a buy signal is likely to be generated, or the converse, reverse of that is sell. And so it's important to understand how some of these buy and sell signals are generated, what they look like on the chart visually. And so I'm going to show that. And like I said, I'm going to get into setting alerts, which is real simple. And then we've got a new spreadsheet on best settings. We've refined it a little bit more. We've added a few things, and I'm going to get into some detail on that. And then we're going to touch on something a little bit new called technical rules. I brought it up in our training on the 27th, a week or so ago, and I'd like to just help introduce that, or to introduce that to some of the other people on the call here that weren't in on that training. And that's been refined a little bit more as well. Everybody's seen this. This is the slide with the rules that Floyd and Rick worked on, that they came out with, and basically that we've tried to mimic very much using TradingView as a platform. And that's why I wanted to show this to you, because I'm going to try to show you what some of this stuff looks like visually in TradingView to help you understand what it looks like. First of all, when we go into the TradingView platform and the chart, there's a place where we can go to the strategy for settings. And the settings has a number of tabs in it that allow us to change those settings. And the most important one is the input tab. And I actually had to split that into two sections here, the one on the far left and the one in the middle. It's really just one long tab. And basically that goes into the different configurations that we can set up with the strategy. It helps us determine what stochastic we're going to use, whether it's going to be on a weekly or a daily basis. And by the way, I want to clarify one other thing. When we run the strategy on TradingView, it's always on a daily chart. We use nothing but daily charts. However, we have it set up so that we can run either a daily stochastic or a weekly stochastic on that daily chart. And that's where we have an opportunity to set that setting up in the input tab. We can also implement different types of stochastics. We've got a MarketSmith-like or MarketSearch-like stochastic now that we call MS. There's a full stochastic and there's a standard stochastic. The full kind of mimics a little bit more the thinkorswim style, and the standard mimics more the TradingView style of stochastic. The strategy will do a combination of longs, shorts, or just short type selling. We're really focused on longs right now. At some point, hope we'll get more into the short side of this. But since the ETFs themselves have reverse or inverse versions, we'll probably look at that as a way to get short as opposed to using the strategy in a short type mode. We can set up trailing stop or fixed stop, but like I said, the fixed stop is not working right now, and set specific parameters, amounts of, and these can be adjusted very easily, whether it be a fixed stop or what we call PD stop. It's very easy to tweak these and change results and see those results very quickly in the strategy tester. The PD stop stands for prior day stop. Basically, we're looking at what did the stock close at, or what did the ETF close at the day before. If it closed at $100, then the PD stop percent means that we're going to set a stop for the next day. In this case, it's 5.83% below that $100. And this would change on a daily basis as far as the actual dollar amount that the ETF would get stopped out on, because obviously the closing price is going to change on a daily basis as well. So it's not like a traditional stop that you use with a typical stock where you would set it maybe at 5% below your purchase price and just leave it there. In this case, it's going to change on a daily basis based on that PD stop amount. We can set a profit target, and we have different settings for enabling us to do specifically buys and sells between the overbought and oversold lines on these stochastics. And down here at the bottom where I've got the strategy will exit, if the fast line crosses beneath this level and longs enter between and shorts enter between, etc. This one I'm going to show you visually a little bit more about tonight, what it really means. But bottom line is this enables you to establish settings that tell the strategy when to exit trades. Then the rest of the input are the stochastic settings themselves. 533 is a fairly typical one. There's a number of typical settings that are used that you'll see in the best settings spreadsheet. We have the ability of adding another indicator on this, like moving averages, that we can set to tell the strategy to like perhaps only do buys if the buy signal comes in above a specific moving average level, as an example. We can do a similar type thing with another indicator, pretty much any type of indicator that where we have the ability to set a level on that indicator, and then we can tell the strategy to do something either above or below that level. So it gives us a way of fine-tuning things. And then we can set dates for backtesting to look at specific periods simply by clicking on the date in the calendar button here, going to that date as a start, and then we can do the same thing for an end backtest. And I always tell everybody there's a time clock below these dates. Always set it to 0000. The time clock is sensitive. It's very easy to set it for a time that might eliminate trades on the day that you're starting the backtest, or eliminate a trade on the day that you're finishing the backtest. But if you set for 0000, you're unlikely to have that problem. The second tab is properties, and properties, there we go. Properties, we set the initial capital we're going to work with. We generally use $10,000. It could be any amount, and it could be dollars or a different type of currency. We usually set this to 100% of our equity. There are other ways of doing this, though. There are different things that you can try with this. But typically, when you go to configure a strategy based on the best settings spreadsheet, in the properties tab, you only need to change two things. That would be the order size to 100, and this tab next to it that says percent of equity. Make sure that says, the drop down says percent of equity. Those are typically the only two things you'll need to change on this tab. Everything else, you just leave alone. The first tab, the input tab, are the things you'll be changing for the most part. There is a third tab called Style that I'm going to show you a little bit later, and that helps you visualize what's going on with the overbought and oversold lines for stochastics, and helps you change the chart visually if you'd so desire. So we're going to talk about buys first, and I've got a chart on the left here that represents a weekly stochastic. You can see the stochastic down here on the bottom left. We have an overbought and oversold line, top to bottom here. And these flat lines, this is a fast, and the blue is a fast line, the orange is a slow line. These are the stochastic lines. And it's what these lines do within the stochastic that helps us understand what we're going to do on the chart as far as a signal. Okay. On the chart, you'll see things like a buy. And with a weekly chart, our buys are always at the end of the week. on a daily chart, which is on the right-hand side, our days are always on the day, our buys are always on the day that we get the signal. So going back to the weekly again, if we get a buy signal here, okay, we're going to, which came on Thursday, we're going to buy at the end of the week, which in this case on our Friday, and this is the number of shares that we bought. The chart is going to function as normal. We're going to get other signals on it, like that PD stop, where the price drops below our stop level. In this case, it was, I believe, it was 5.8%. If it drops below that level, it will hit a stop and your shares will be sold. We typically, as long as the fast line is over the slow line, we will typically rebuy the next day. It's interesting the way this works out, but quite often it's to our advantage to do that buy the next day. A lot of times we end up buying at a little bit lower price and we end up making more money because of it. But bottom line is, as long as the conditions are still good and favorable, the way the stochastics are looking, then we want to do those rebuys and stay in the trade. So we'll rebuy and we may end up getting stopped out again and we may end up rebuying again. Okay. And we'll keep on going. We also have something called a profit target reached level. And that can be set specifically for every setting. In this case, I think we've got this one set for, I forget what we have it set for. I think it was 16 or 19% as a profit target. Once it reaches that level, it's going to do a very similar type thing. It's as long as the trade is looking favorable with the fast line being over the slow line, it will rebuy. In this case, you can see it rebought at a lower price. And that hopefully is going to be to our advantage, as hopefully this chart will continue going up and to the right and we'll continue making money with it. Down here, we've set these levels. Longs are entered between 10 and 90. That means that as long as we get a crossover of this fast line crossing over the slow line between the 10 at the bottom and the 90 at the top, we're going to tell the strategy to make a buy. Okay, so we're telling it to buy between 10 and 90, between those levels. Shorts are really not shorts. Think of it more as sells. This is the level we're setting up sells to come in at. And in this case, it's between 10 and 45. There's another way of changing the visual on this. So you can change the overbought line to coincide with the 45 level. And so then it's easy to see if you're actually getting a sell signal between that 10 and 45 level. I'm going to show you what that looks like in a few minutes when we get to sells. Over here on the right, it's pretty much the same thing, except we've got the buys between 0 and 100. So it's wide open for buying. And we're going to do sells between 8 and 57. The difference is that instead of this stair-step line on the left where I do weekly, on the daily, it's a gradual flowing lines that mimic the fast and slow line levels on a daily basis, what those settings are at, where would they come to on a daily basis.
Hey, Ray, this is Floyd. Can I make a comment?
Sure, absolutely.
So the one thing that is probably already known by everyone, but just in case, these aren't random numbers that Gary picked out. Gary did a very significant amount of back testing, and all of these variables are basically optimized variables from the hard work that Gary did, which I verified some of these. And so if you see a number on here, it's because through a multi-year back test, it produced the best end results. Do I have that right, Gary?
Yeah, at least that we've found so far. And there's different ways of looking at best. And I'm going to talk about that a little bit too. But that's basically correct. The next slide, here we're going to talk about selling, and there's two ways of looking at how we initiate sells on the chart. And I'm just calling it cell A and cell B for convenience sake. That really doesn't mean anything, okay? But the first, and I'm just going to do this on a daily chart right now because I'm just trying to illustrate the concept and how this works. We're going to tell the strategy that we're going to do shorts and sell between 8 and 57, okay? So we set that down here. You can see that down here at the bottom. We set shorts between 8 and 57, and we're going to sell between those settings. So visually, we're going to set the overbought and oversold lines at the 8 and 57 level. And what that means is we're going to sell if the fast line crosses down below the slow line, as long as it's between those two levels. It's going to initiate a sell signal. And like I said, in a daily stochastic, we're going to sell the same day that we get the signal. Okay. So here you see this is called a cross under exit. Okay. It's a sell we've made because that signal came in and we made the sell. And it's one of our standard ways of the strategy selling and getting out of a trade. You can change visually these levels, like I said, the overbought and the oversold. On this style tab, down here, we've got two levels that can be changed. The top level, 57, and the bottom level, 8. The reason I'm pointing this out is because it depends a little bit on what you want to look at. You want to look at where your buys are taking place in the stochastic. You want to look at where the standard sells are taking place. Or there's another kind of sell. I'm just going to call it a cell B in this case, but we call it in TradingView, a K-line cross under overbought exit, which is a mouthful, I know, but that's what the programmer came up with. But in this case, I'm looking at a weekly chart. And remember, in the weekly chart, we get the signal and we sell at the end of the week based on that signal. All right. And in this case, it's a little different. We have set the strategy will exit if the fast line crosses beneath this level at 45. Okay. The 45 is not the same as the shorts as far as the standard sell, the 10 and 45. It could be, in this case it is, but it could be different. It could be higher or lower. If it's higher, it might look a little bit more like this. But bottom line is we're going to look for a signal where the fast line crosses the slow line above the overbought line. And then that fast line is going to drift down until it finally touches and either ties with or goes through that overbought line. And that's going to initiate the sell signal. That's going to create the sell signal. And when it creates that sell signal, that fast line crosses beneath level, it's going to go to the end of the week and initiate the sell. In this case, it's Friday the 15th of March of this year. So that is the second type of sell. And the only reason I'm pointing this out is so you can recognize it on the chart. Other than that, you really don't need to pay much attention to these other than understanding if a buy or sell condition might be approaching on the chart. It helps to know this stuff. Okay, I'm going to talk about alerts for a minute. So any questions on that real quick? I know I went into a lot of detail. Everybody still awake?
Yep.
This is the DJ. Quick question. In case of weekly, we have to sell on Friday only. Not
Or the end of the week. It could be a Thursday.
could be Thursday. Okay.
If Friday's a holiday, it could be a Thursday.
Okay. but it has to be the last day of trading on that week.
Right, correct.
All right, thank you.
Okay. And that's part of the reason why going to show you alerts is because the alerts are pretty good as far as initiating at the close of the day and sending out an alert. I'm just going to change the share here for a minute so I can show this to you. Oh, here it is. Okay. Stop share. And share. Trading view.
Yeah, we got it.
Okay, great. Okay, good. You still got it?
We have a star pattern with a pyramid.
No, okay, hold on a second. That's got to be the other.
Now, don't tell me no. That's what we're saying, buddy.
Sorry about that. Yeah, it's funny that the share in here comes up with two different screens to go to. Try this.
Okay, we got it.
Great. Okay, good deal. All right. So I'm going to show a couple of things on this chart. This happens to be the TQQQ symbol, okay? And I'm using it with a weekly stochastic. And I'm going to show you how to establish an alert with this. Up here on the right, you have a way of renaming the layout on your chart or making a copy of the chart. There's a number of things that you can do. You can also change the layout. But what I like to do is I like to name the alerts pretty much the same thing I've got on my layout, so I know where the alert is coming from. So I'll just go to rename and I'll click that, and then I will copy what comes up. So I've got the name, and that's all I need there. And then I will go to the strategy, and here's the settings button. And then to the right of that, there are three dots. All I need to do is click on the three dots and click on the very top selection. You click on that, the alert window pops up. There's only a couple of things you need to do. Click on this second drop down here and go to the bottom one and click alert function calls only. Okay. And TradingView will put a name in here for an alert. But like I said, I like to rename it something that I can recognize a little bit more easily. So I will delete that, and then I will just simply paste in what I named it. In this case, I'm going to put I'll put a number in front of that because I've already got a setting in here for that alert. And I'll come back to it and delete it later. But I'm going to hit the create button now, and I've created the alert. Now, in TradingView, the alerts button is the second one from the top on the right. It looks like a clock. This is where all of your alerts are. And the alert that I just set is this one right here with the little number sign in front of it. And I can double click on that and it'll pop up and I can see it. Now, I have this set up for myself so that I get alerts in email and I also get text alerts. You can do something similar. It's very easy to do through the TradingView configuration. But I encourage you to do that because the alerts do work pretty well. Okay. And then if I want to close that, I just do that. All right. One other thing I want to share. Any questions on alerts before I move on? Okay. One other thing I want to show you on this chart is this is the strategy tester right here, this blue tab. And I can look at an overview or summary or list of trades. And these are all the trades that happened during the backtest period that I set. In this particular case, I set a back test period for the year of 2018 from January 5th of 2018 to December 14th of 2018. And during that period, it took 15 trades. And these are the trades. The very last one stopped on December 14th. The first one, I can reverse the order this way. The first one took place on January 5th of 2018. I'm going to reverse that again. The reason I'm pointing this out to you is that TradingView is a little bit different than other programs. When you generally look to do a back test and try to determine performance and measure it, etc., most times you'll set January 1st as the beginning and December 31st as the end to do that. And we can do that with things like Excel and some other programs. But TradingView is different, and particularly with this strategy, because with this strategy, every back test that we do begins with a buy. Every single one begins with a buy. So if I go down here to the very first trade, the very first thing is a buy. We enter long. All right. And because of that, it's important that we look at the end of the backtest period if it's going to be important to us in doing a follow-on backtest. So in other words, if I'm doing 2018 and now I want to do a backtest for 2019, I need to be careful about when the trades end, because you see how there's a buy here, then we've got a PD stop, then we've got another buy, which is good, then a PD stop, re-entry buy, a PD stop, re-entry buy, another PD stop, etc. And anyway, these re-entry buys and PD stops are considered part of the original buy when it comes to back testing. So when we go to the end here of this ending on December 14th, if I wanted to look at January, if, for example, I set this to January 31st of 2019, and if I tried stopping this back test instead of at December 14th, when I did, okay, it would go ahead, you grab this buy that came in on December 28th, and it would give me all of these buys that happened after it until it gets to another buy entry. So it would calculate all of these into the total until it gets to another buy signal. That would go into the back test number. And that's why it's important to look at what's happening as far as when the back test ends. I know that's a little bit confusing, and it's unfortunately a way that TradingView works, and this particular strategy works on TradingView. And with that, I'm going to move on to a couple other things. I'm going to stop sharing and move to the presentation again. I think it's this one. Is that coming up yet?
Yeah.
You seeing the presentation?
Yeah.
Okay, great. Good deal. Okay. When we look at all the different stochastics and the strategy, etc., there's a number of questions that just naturally come up. And I'm sure that a number of you have struggled with this, kind of have looked at the strategy closely, and that's things like, do you use weekly or daily? And how, if you're following this on a real-time basis, how do you reduce your risk? How do you keep your risk as low as possible? And how do you build confidence in the strategy? How do you feel confident that you're doing the right thing, and that if the strategy says buy, you really should be buying. If it says sell, you really should be selling. And you've probably noticed that in a lot of these, there are some pretty significant drawdowns. So how do you handle the drawdown? That's a pretty tough thing. Speaking of drawdowns, if you think the drawdowns with the strategy are significant, They're a lot more so with the buy and hold. The drawdowns for that tend to be a lot harder. Yeah. So this is the new best settings spreadsheet, and we'll distribute this or make this available with the slides. We have checked all these against the latest code, and we have added a few extra ones. There's one on the bottom I'd particularly like to point out that Floyd actually came up with. I'm sorry. Let me go back. How do I go back? There we go. This one here. There I got it. On the bottom. In this particular strategy, Floyd came up with a way of doing about $1 million worth of net profit with only 38 trades over a 7-year period. Or I'm sorry, 6-year period, I guess it was, from 2018 through early 2024, and set a 61% profit target. So I'd encourage you to take a look at that one, and Floyd might want to talk about that one in a little more detail later on. As part of this spreadsheet, it has additional tabs at the bottom. So in addition to the best results, you'll get a summary on SOXL and TQQQ, and I'll show you what those look like in a minute, as well as the worksheet that went with developing those summaries for SOXL and TQQQ. So what the summary looks like is this for TQQQ. This is over, excuse me, my voice seems to be going a little bit, over an 11-year period, looking at it as if we started the strategy on any given year. So if we just found out about this strategy and started it on January 4th of last year, through the end of 2023 to January 2nd of this year, buy and hold would have done about $19,000, and the strategy would have done about $11,000. However, over the 11-year period, okay, the daily strategy here on the left did about 1.3 million versus the buy and hold at about 1/3 of that. And a lot of that is because of compounding. And so there are a number of years here where the buy and hold actually maybe produced or an actual higher net profit for a given year. However, the years that it had losing years were generally pretty significant and higher than the losing years that we experienced with our strategy. And there are just a few of those. The other thing is that when you do buy and hold, of course, you have absolutely no control. You're sitting on your hands, gritting your teeth, etc., and you're experiencing those huge drawdowns where, at least with the strategy, we have some control. And there are things that we can do. And we can get into things like maybe tactical buys that might help limit our risk and our exposure a little bit and help increase our profitability and reduce our losses a little bit. So this is a comparison, daily versus weekly, daily on the left, weekly on the right, what the strategy did versus buy and hold. And then I gave just straight numbers as far as on the 11 years, how many times, example, the buy and hold outperformed versus the strategy outperforming. And then just for grunts, I took the net number. So in other words, I just added up the positive numbers and the negative numbers in the column and to get to a total and subtract the negative number, and we got a net number. I encourage you to look at this and draw your own conclusions, and I'm anxious to hear what you might have to say about it, and hopefully you'll send me some emails about this. But I want to illustrate areas where we need improvement and where we can use some help. And the other one I wanted to show you, this is TQQQ, and this is SOXL. I did the same thing as far as showing daily on the left, weekly on the right. And the other thing I want to point out is remember that these don't start on the first of the year and end on the last day of the year. They start based on dates that were I won't say convenient, but compatible with the strategy. So in other words, if a buy or if a strategy or a backtest ended on December 29th, that's because the last sell happened either on that day or right before, and that was before a new buy started the following year. Okay. So these are going to be staggered dates because of that. So anyway, this gives you an overview of both major LETFs that we've talked about a lot as a group. And I mentioned that there's at least a draft version. I call this a draft because it's very much a draft of some technical rules that we could use to help us navigate this. Try to keep it pretty simple. And I'm going to show you what each one looks like in a minute. But bottom line is that there's only a few things you need to look at. Is the 10-day on top of the 21-day? Or is the 10-day below the 21-day? Okay. I'm sorry. Let me rephrase that. And then in this case, the very first one is the 10-day is higher than the 21-day is higher than the 50-day. So all the moving averages are lined up. So this is the first buy rule. And basically it's saying, hey, this is good. Go ahead and buy. Everything looks good. The second is the 10-day is over the 21-day. Okay. But even though it's over the 21-day, one or both of the moving averages is below the 50-day. Right? It gives you a way of handling it if that's the case. We're saying it's okay to buy if the 21 or the 50-day is rising. In other words, it's moving up to the right. And then the other one is the 21-day over the 10-day. And if it is, then if the 21-day is above the 10-day, it's okay to buy as long as that 10-day looks like it's going to rise above the 21-day really soon. Okay? Is it the next day or within a couple of days? Or if you're not sure, wait. You don't have to do anything that day. That's part of what we're trying to tell you here is that you don't need to take action specifically when you get the signal in this kind of condition. If you're not sure, wait a day, wait 2 days, wait 3 days, etc. And then also if the price is below the 50-day, then you want to look and make sure the 21-day is either rising or flat. That's another little hint that there's a better chance it's going to be successful. All right. Some of the things to look for to help you navigate this and reduce the risk and hopefully increase profitability. The third one is, there's a little note that goes with the third one. And that's if that 21-day is trending down, if it looks like it's moving down, then 10 days going up. The rule says not necessarily to wait, it says the buyer wait, but we're suggesting that you just wait, okay? And a lot of times that 10-day will continue on to rise above the 21-day, and then you can use rule number 2, and that's a little bit easier to satisfy because 10 days is over the 21-day. And then you just need to look at what's the 50-day moving average do, is that rising? So we try to keep it really simple with 3 basic rules. The last one is just like a no-brainer, okay? If you get a day where you get a buy signal and the chart says, hey, the stock is really down today, you've gotten a buy signal on a day where the stock is down at least 2/3 of your PD stop level, okay? All right, don't buy, or at least wait to make a decision. Wait a day or 2, all right, before you make a decision. All right, see what it's going to do. There's nothing wrong with doing that, and it's probably going to help you more than hurt. And then just use common sense, okay? If you got a bunch of the moving averages coming together, they're real close, they're probably going to break one or the other. If you've got a bunch of down days in a row and you get a buy signal, wait. Just use some common sense. That's all we're suggesting. So what this looks like is here we've got the 10, 21 day and the 50 day moving averages, green, purple, and red. And we're just saying if they're lined up, great, everything's good. If they're not lined up and the 10 day is above the 21 day, but one or both of the moving averages is below the 50-day moving average, like in this case, right? By only if the 21-day or the 50-day moving average is rising. In this case, we got the 21-day moving average rising. So it's okay to buy. If you're not sure, wait. Same thing here, except reverse. We got the 21-day, the purple, over the 10-day moving average. All right. Now we're looking for this 10-day to appear like it's going to rise above 21-day. All right. And we want that to happen pretty soon. If it doesn't look like it's going to happen pretty soon, either wait or just don't trade. Okay. Don't do anything or consider it a trade that's just not going to happen. If the price is below the 50-day, then look for that 21 day to be rising. Or if it's not rising, at least for it to be flat. Okay. And then again, in this case here, we've got a stop on a pretty big red candle day, and then even larger down day where we've got a buy signal. All right. If this is a huge down day, if it's at least 2/3 of your stop level, don't buy. Wait and see what's going to happen in the next day. In this case, we got a price under exit, so the strategy exited. But we may not have. It may have continued going up, and you may have gotten a new buy signal, or it may have gone up and you go, okay, I waited here, I didn't buy, and now the moving averages have moved up, and now it's clear that I can buy. I did a spreadsheet. This is looking at the year 2018, and the initial year on the breakout for 2018 shows our strategy losing $199 this year. And what I did is I went through and on the spreadsheet, I just looked at each individual buy signal and I looked at it compared to those tactical rules. And I wrote in here what it was telling me based on the tactical rule. All right. In this case, I'm looking at, it looked like an M2 rule. It looked like the 21 day was rising. And so it met the conditions. So it was okay to buy. These, I evaluated them against the M3 rule because that's the way the moving averages were. But it didn't look like they were favorable. It looked like the moving averages were moving down. So no, I didn't make a buy. In this case, it suggested I should wait because it looked like things were changing. In this case, even though the signal came on November 30th, it looked clear or more appropriate to buy on December 3rd at a little bit different price, in this case, $13.32. Like I said, it's not a black and white situation, and the tactical rules may help you. In this case, applying this to 2018 year, instead of $199 loss, strategy had a gain of $1,768. So that's some of the difference that this can do for you. And that wraps it up. And with that, I'll open it up for questions. That's a good thing. I'm losing my voice.
Yeah, why don't you stop sharing your screen? If you're, because I want to share a little bit of something too.
Sure.
Just to help people get a sense of what's going on here. Let me see if I can bring up, oops, it's not letting me share. Let's try again. And share screen. Let's see. So can you see my trading view?
Yep.
So this is current. This is real. This is the real deal. This is TQQ. And it is a weekly strategy that I've developed here. And notice the fast line is over the slow line. let's see, I think I need to let me adjust the dates so I can get us into real time. So let me just pull down. Gotta make this rewind and let's go to,
There you go.
so we had a buy signal over here in late April. I've had several of you send me emails and say, is it time to buy or not? We got a valid crossover back over here on TQQ and on SOXL. And the performance has been good. I watch it like a hawk. For those of you that are on Thinkorswim, let me see if I can share a Thinkorswim screen. Let's see, I think I have one up. Let's see if I can find, let's see, this is Thinkorswim. You see that, TQQ?
Yep.
Yes. So over here's it's a weekly strategy. Here's the buy signal. So over here's where we had the cross. And so Swim doesn't do this. I put these in manually myself. But an interesting thing is back over here, and I got to move a window because I can't see what's happening. Oh, this was the November 3rd. Let's see, that guy got inserted and I didn't want to. This was a November 3rd buy on a Friday. I took a little bit of chance and I decided to buy on Wednesday, November 1, and we didn't get a single sell signal ever until way over here in March. And from this point to that point, that was a 72% gain and no sell signals in between at all. It was a little bit of period in January where it looked like maybe we were going to have a sell signal, but we said only sell if the fast line drops below 37, and so it didn't. And so for those of you that are committed to Thinkorswim, I think I saw where someone shared the link for the screens we have. When you go to SOXL, you use the bottom stochastic scale. And so there was a clear buy signal right over here late in the month. And so those of you that are following the strategy, I guess the question I would ask is if in fact you're following the strategy, if you haven't bought yet, the question might be, what are you waiting for? And it's not meant to be a judgmental question, but if you're following the strategy and the rules, and maybe you have your own rules is why you didn't buy, but if you're following the rules for TQQ, you use the Marcus Smith style stochastics. Now, it's not the Marcus Smith or market surge stochastics because they have a period of 14.55. And if you're using a weekly strategy, that is just way too long of a period. For our weekly strategy, we use 5.33, which gives us faster signals from our back testing, much better performance. And so if you're following our rules, the buy signal is when the fast line crosses through and above the slow line on a Friday. If you're using a weekly strategy, if that fast line is above, you buy it. And we got that about 2 weeks ago or so, and I think we're probably up 7 or 8% since we had that buy signal on both TQQ and SOXL. Just wanted to share the screens real time, how things look today, and I'm fully invested in. I went in 2 legs, but I'm fully invested now. I'm watching it like a hawk. When I get the sell signal, I'm going to go to cash. So there's a lot of information, and you can unmute yourself if you have a question, and just feel free to ask away.
Hey, Floyd, can I mention one more thing, please?
Absolutely.
On those tactical rules that I showed, like I said, that's a draft. Listen, there have got to be other ways of doing this that you may think of that might be a lot better than what I'm showing with those 3 or 4 rules, with that draft set of tactical rules. Please, we'd love to get your suggestions, your ideas on that particularly too. Help us think of other ways of addressing this. Okay.
That's a great point. And one thing I'll show you here where you guys can help us. I'm going to share my screen again. I'll show you an area where you can help us out a little bit. Let's see if we can get to Trading View. Is this the one that I had, Gary? This is, I don't know which one I'm looking at right now. Maybe I want this one. It doesn't matter. What I was going to show you is we can go to the list of trades. And I got to move a window because I'm getting blocked by some things. In this particular example, there's 95 trades, and you can export this like to an Excel file. And what I like to go through and look through and say, for example, let's look right here in 2023. Here's a trade that lost 6%. And I got back in, I lost another 6%. I got back in, I lost another 6.7%. I got back in, I lost some money. So when you see 4 or 5 of these losing trades in a row, that's where we end up getting the drawdown. And so we're looking for help here to figure out, is there a extra rule we need to have? And one example would be, if you have 2 trades in a row that are losing trades, what should you do? Just keep going and let you have 5 in a row trades? Or is there something to look at maybe with the moving averages or with a relative strength index or Williams R or Bollinger Bands? I don't know what it might be, but you can help us through back testing and say that if we have a strategy that typically works very well, but we have drawdowns. So the strategy that Gary told you that I developed, and maybe it's this one, Gary. Let me pull it up. Where I made $1 million in only 38 trades in 7 years or so, which is pretty amazing. In 7 years, if you only have 38 trades, but it was about a 60% drawdown. And so I was starting to look at the trade list and say, do I have a period of time when I have multiple trades? Like here, I'm seeing 1, 2, 3, 4 trades in a row that occurred in 2023, and each of those lost a little bit of money. And so there's an area where maybe from our members that are using TradingView, you could help us. And one thing my intuition is telling me is after I've had 1 or 2 trades in a row, if the price of I know why I'm having trouble. That strategy was on SOXL. So let me pull that one up. Here we go. I think it's this one. Yeah. This is the one I wanted to bring up. This is SOXL, and I only take a profit if it's up 61%. And I think in 7 years, I had 6 examples, almost 1 cycle per year, where I was up 61%. And so you'll notice that I took this one to the end of the year. If I stopped at the end of, this is live through today. If I stopped at the end of 2023, I had $1 million. So if we take it through today, we're up at $937,000 net profit, and we only did 39 trades. So that's pretty cool. We're performance summary. If we look at it, where does it tell us the drawdown, Gary? Is it on the performance summary?
Overview.
Max drawdown, 62.75%. So even though I made, I think, $937,000, at one point I might have been up like 1.4 million. And so I like the 937,000, but if I was at 1.4 million, how discouraged would I be if I see trade after trade where my over $1 million profit is down to something lower? And so part of my intuition is, and I study graphs pretty thoroughly, but we haven't had time to back test it yet, is after the first or second losing trade, if the price is below both the 50-day and the 200-day, and you get a buy signal, don't buy. The odds of that third trade being a loser are pretty darn high. But if you don't buy, then the new problem is Okay, I didn't buy because I'm in a negative market. When do I get back in? And we're trying to establish that now. One strategy that we haven't had time to backtest yet is if I defer a buy because SOXL is below both the 50 and the 200 day, maybe I get back in when the price has come up and passed through the 21-day EMA on a way to higher ground. And my intuition is of these 39 trades that made roughly $1 million profit, if I could just avoid one or two of those losing trades, my performance would be vastly improved. But if I'm too conservative, I may end up avoiding some very cool winning trades also. So sometimes the nice cool thing about TradingView is we can make a change, and within roughly 1 second, we know the impact of the change. And let me give you an example. And Gary has done training on this, but let me just show you an example here. I'm going to bring up the settings window. And I said, let's have a trailing stop of 28.4%. And notice that my profit is $937,000. I'm going to make this, let's make this 22.4%. What's my profit? $91,000. Can you believe that? Let's try 24.4. Now I'm at 255,000. So you can see with TradingView, you can go in and you can make adjustments very quickly and see what the impact is. So now at 27.4, I'm back up to about 800,000. And here I am at 28.4, I'm at 937,000. So the power, the amazing power of TradingView, once you get your screen set up, you can go in and you can make adjustments to where the overbought line is, the oversold line is, the stop from the prior day close, the trailing stop, or the period of time that you want to test. And so we have a very robust group of people here and some enthusiastic people. And when Gary did his training about 10 or 12 days ago, we had a large number of attendees there, and he went darn near 3 hours, but it was excellent and it was recorded. So if anyone wants to see the recording, you can get it. But we'd love to see some of you out there. Here's the goal. Take like this strategy I have in front of me right now. Make it better. And share with us how you made it better. Maybe there's a rule that we could use. And I guarantee you, we'll give you full credit for it if we end up showing you a rule at a future meetup, and we'll say, hey, this one was developed by whoever it was with a lot of thanks on our part, because now we're trading better and smarter. But I really like the screen I have in front of you. Personally, I really like the fact that in 7 years, actually more than 7 years now, I only had to do 39 trades and my profit was roughly $1 million. That appeals to me. Some of you, your personality and trading style is you're okay with the daily trading strategy that Gary has developed with help from Rick and others. But those may require, instead of 39 trades, they may end up having, and these are round trip trades. So by the way, you have to take 39 times 2 if you want to count total number of buys and total number of sells. But on a daily strategy, instead of 39, that number might be what, Gary, like 250?
Yeah.
So 250 means you actually had to do 500 trades, 250 buys and 250 sells. So if you're okay with frequent in and out, the daily strategy is okay with you. If your personality is more like mine, I want to fine tune and optimize the weekly strategy because I'm more comfortable if I only have to trade maybe on the average of 4 or 5 times a year or whatever the number is, instead of maybe 4 or 5 times a month. So I'm going to stop talking and see if there's questions for me or Gary, or if you're up to the challenge of helping us figure out how to. The goal is to still have good performance and less drawdown. This strategy that I showed you right now has a 62% drawdown, even though with that drawdown, we still made almost $1 million. But my concern is, and I think Gary and Rick's concern, if you have a significant drawdown, will you get discouraged and will you throw the towel in and say, this doesn't work, I'm going to go find something else? So I'm going to stop. See if we have questions, comments. Hello. We got 74 people online. Not one of you 74 have a question?
Richard May, how you doing?
I'm doing fantastic, buddy.
Yeah, thank you so much for all of this, for whatever all of y'all are doing. The question that I had on the trailing stop that you showed us there, and you varied it down to 28 from 28% and then less. But if you increased it to, I don't know, 35 or 40, did that help any or hurt any? Or?
Let's show you here because that's an excellent question. I'm glad you asked the question. So here's my SOXL by 61%. So and notice that this is through, I think the closing price today, we're showing $937,000 profit. Let's make this an even, wait a minute, did you say take this to 30%? Okay.
It could be anything, just more. You went less stop loss, and I just wanted to see what more, 30, 35, or 40, I don't know.
So I'm under 30, I'm at 937,000. At 30, I'm at 771,000. So notice, this is fairly sensitive. Let's make it 32. Or 30, let's make it 33. Now I'm at 553,000. Let's make it, let's try 40. At 40, I'm at about 400,000. And so the reason we used the number we did is because we did all these what if games. And I think it was, what was it? 28.4, I believe was the number. We already did all of those activities. And under the current operating strategy, we found that 28.4 for a trailing stop and a stop against the prior day close of 19.3 and 61% target. Looking backwards, now this isn't looking forward. We can't predict what prices we're going to do from here forward, but looking backwards, these are the numbers on a weekly strategy using the Market Smith style stochastics. I apologize, I said that wrong. For SOXL, we're using full stochastics, not Market Smith style stochastics. So that's something you really need to know. Notice I have 937. If I put Market Smith stochastics in, my 937 goes down to 325,000. It just blows my mind how much difference there is depending on which style. So you have to know, like for TQQ, we're going to use Market Smith stochastics. For SOXL, we're going to use full stochastics. But the power of TradingView that Gary has so graciously given much of his time to train a lot of us, he's sent out links, he's sent us emails. We can go through and change any of these numbers and look at the total, and you change a number in 1 second. It's done probably a few 100,000 calculations, and in 1 second, we know what the impact is. So I hope that answered the question.
Yes, thank you very much.
But those of you that have TradingView, feel free. Gary had a different set of numbers in this. And one Saturday, maybe a week or so, I just said, hey, let me just go through and do some what if games. And I started playing with the variables. And after about the 100th change, I came up with this one because I think Gary's weekly strategy made $400,000 or $500,000, and all of a sudden, I found one that made about $1 million, but I had a greater drawdown than Gary did also, even though I had a higher end total. And there's somebody out there that's going to go through and look at TradingView, and from your experience and your talent and however you want to do it, you're going to come up with something better, right? I'm sure of that. And then there's another thing we can do that Gary hasn't gone into. We can even add, there's a place down here that says another indicator. And we can this is where maybe we can establish another rule. And I'm not going to go into that tonight, but I'm personally practicing the SOXL weekly strategy the TQQ weekly strategy, and the 4X weekly strategy. Those are the three that I'm invested in right now today. And if you don't know what the 4X is, that's S&P 500 times 4, trading under the symbol of XXXX. It has only been public for about 4 months, so it doesn't have a really long price history. So the way I back tested SXXXX is I back tested, what did I back test? Was it UPRO? I can't remember.
Yeah.
I back tested the one that is the S&P 500 times 3.
Yeah, UPRO.
So I did UPRO, and I optimized UPRO, and I used the set because that's 3 times the S&P 500, and I used those settings for X, which is 4 times the S&P 500. And I bought that a couple of weeks ago, and I'm already up 10% on XXX. All of them, I think I'm at roughly 8, 9, 10% on all 3 of them in just a couple of weeks. But I'm watching it like a hawk, because if we get a negative market because of whatever, something's going on in the world, interest rates or whatever, if we get that fast line moving below the slow line, we need to go to cash, because our back testing is telling us preserve your capital and be ready for the next uptrend, basically is what I'm trying to say. And so if you're going to set a set of rules, which we've done to try to help you, if you're going to follow the strategy, follow the rules. And if that's not working for you, then develop your own rules. There's nothing magic or necessarily the right way to go because of the rules that we've developed. And so you have the ability with TradingView or with Thinkorswim or whatever means you want to use, you can develop your own rules. And if you do, and if it works out great, my only request is please share it with the rest of us.
Okay, a bit of a question from the peanut gallery here.
Yep.
And I'm a new person. Thanks for letting me in from Lincoln, Nebraska. Is there anyone that's backtesting or working on this with Python? If so, I'd love to collaborate with you.
I don't think any of us are working on with Python, not Floyd, Gary, or Lee for sure. Although I'd love to learn Python and has some great capabilities.
Now, Rick is our programmer, and Rick is the one that volunteered to me about 15, 16 months ago. I was trying to do a lot of back testing by hand, and so Rick has done a whole lot of programming. Originally, it was on Excel spreadsheet, and then now we're using this, is it called Pine Code or whatever? The Pine edits on
Script. Yeah.
Pine Script on TradingView. And if there's something to go on with Python, I'd say collaborate with Rick Keller. He's in Houston, and we can get you in contact with him. And if that's a good way to go, we'd like to know it.
Just to be clear, Gary's system was not coded by me. He's hired a different programmer who knows Pine Script very well. I'm still learning that one, but I'm a professional software developer and dabbled with TOS to Thinkorswim. So I know that one doesn't have the capabilities of what this has. But
so the guy from the Dakotas that asked the question there, what advantage do you think might come to us with Python?
Frankly, it's what I deal with that in SQL the most. And I don't have TradingView, so it's just a matter of wanting to know if there is a flavor of this in the language that I speak. So totally selfish.
What platform would use Python?
Python is actually platform agnostic. It will run on Linux or Windows. Mac, it actually will run on Raspberry Pi, which is the small little PC on a board systems. So you can basically run it in a Docker container or on a VM of any flavor operating system. That's part of the beauty of it, is it's an interpreted language.
I think Gary's question was more along the lines of what trading platform does it run on. I don't think it's used. I'm not aware that it's used on any trading platform such as Thinkorswim.
No, actually we can, via the API, we can connect to Thinkorswim. I personally use Thinkorswim and Interactive Brokers as my primary broker, and then my secondaries.
You mean for sending in orders to Thinkorswim? We're actually coding something that shows up on the Thinkorswim screen.
You can do that. I personally still put my orders in manually just because I'm a 1 or 2 trade a day guy. So I'm not a high speed day trader. I have a normal day job, but no, it can be done. I've got guys in my investment club that have totally automated trading.
But I was asking more, so they do automated trading with it, but can you use Python for developing a strategy that is displayed on the screen in Thinkorswim? I'm not aware that it can. Thinkorswim can only
No,
strategies that use its proprietary language, which is the Think script.
That is correct. Yeah, it's not directly. No, you can't drop it into Thinkorswim and display it on that. You would have to display it on its own on another platform.
Right, a user interface that you would create. So Python is basically it'd be a fully like homegrown system, right? Or is that's what you're having now? Is it's fully independent of a trading platform, except that it sends in orders to the trading platform. That's what I'm understanding you're saying.
Yeah, it can be used for doing the analysis or actually putting the orders in. Obviously, in this environment, we would be looking at just doing the analysis of it.
Thanks for sharing that. That's intriguing to see if there's something. We're always looking to learn. We're always looking to improve. Yeah. And then the one other area where we haven't been able to find a way to successfully trade the inverse LETFs. For example, when you get the sell signal on TQQ, should you buy SQQ, for example? And so far, we do not have a successful way of doing that. So someone, Murthy family has a question?
Yeah. Floyd Watson here. Good question. If you can share the screen that you were sharing a little earlier, this is more in.
Okay, let me get that up.
Yeah.
Let's see, I gotta go like this screen right here.
Yeah, thank you. So
this is SOXL.
Okay, then that's fine. So the stochastics is weekly, but I was curious to know on the chart itself, you are showing it in daily. Does it mean India daily versus weekly or the
using and trading view? My understanding is we have to show the daily chart, but the program is written such that it is operating as a weekly strategy. So the buys and sells are on Fridays, for example, for example, if you get a trailing stop violation, like on a Monday or whatever, it's not going to wait until Friday, is it, Gary? I think it's solved then when you get the trailing stop violation. But typically you're doing Friday trades, but we're displaying a daily chart here. If I end up making this weekly, the whole thing blows up and it doesn't work. But this is a weekly strategy showing on a daily screen.
Okay. Another way to say it is that it's really it's coded to only work on daily charts, and it's the stochastics that is set for the weekly. That's the only part of that's weekly. Everything, all the calculations are day by day, and the stochastics, you can either change to have the stochastics be daily or weekly stochastics.
And for example, this fast and slow line here, this is based on today's closing prices. In the future, this line will show, like here, all these are based on the Friday closes. So during the week, these are interactive lines, but tomorrow at the close, it will establish the final position for these lines. And so I hope that we answered your question.
Yeah, thank you. Thank you. I appreciate that. Oh, one follow-up question. On the profit target reached, I think that's when you're setting a particular profit. Have you seen any place where you reach the profit target, but I see that there is always a re-entry by next day or rather the end of the week. Ever do
if you hit the profit target, I think as long as you're still in the buy zone, you buy the next day.
If the buy signal is still on,
the buy signal is still on, you jump right back in.
Which seems a little counterintuitive, but yeah, again, we just see the results. The results are just really good.
SKJ, you got a question?
Yeah, actually, I was trying to get the Excel sheet which was used for back testing.
Yeah.
I like to go through some pattern where you may have come out at a certain profit range, but it's kept going up, and wonder if we take the average of that and see which is the midpoint or the point where it maximizes the profit. So I wonder if somebody can send me the spreadsheet of back testing.
All right. Actually, there's a couple of things here. First of all, do you have TradingView now?
I know I have POS, but I'm planning to get, yeah.
Okay. All right. Then I can send you a couple of spreadsheets, but we can generate a back test on most anything. Okay. It depends on what period. If you want to look at the slides when you get them and let me know, send me an email with what period you would like to see the list of trades for, then I will generate that for you. How's that?
Yeah, that'd be wonderful.
Okay.
And if I need anything, yeah, I will need your email then.
So we got Peter C's got a question.
Oh, this is Pete. Can you hear me okay?
Yeah.
So first of all, thank you, gentlemen. Thank you, Floyd. Thank you, Rick. Thank you, Gary, for your time and your effort in all this. I have been in and out of this webinar for the last hour and a half. I took to heart, Floyd, your presentation months ago. I basically started the ThinkScript platform. I looked at what you're doing with the stochastics, and in my, I don't know, 20 years of doing this, I've gone from MACD to RSI to Bollinger Bands to a combination of RSI, Bollinger Bands to a combination of all the above, and I settled on TSI, True Strength Index. The bottom line that I wanted to share with everyone on the webinar tonight was you are using stochastics to get in and also stochastics to get out. I challenge everyone to do something differently. I am using TSI to get in and I'm using a price action to get out. For example, my exits are based on a 52-week high. Also, a 6-day swing low. So if the price drops below a 6-day swing low, I'm out. And if the price goes below the low of yesterday on a 52-week high, I'm out. And frankly, the returns on this far, let's just call it unbelievable. And I will leave it at that. But to your point, Floyd, I am looking at Excel spreadsheet where I have, over the course of 5 years, backtesting that is, 44 total trades for well over 100% return.
Fantastic. If you don't mind sharing, or do you mind sharing that, but like by email with Rick, Gary, and myself, so we can review the strategy?
Happy to do that. I'm not sure how I can do that. I could actually copy the ThinkerScript scripts and share it with the entire group. Obviously, this is one beautiful thing about the market versus real estate. Real estate, there's only one property and everybody's after one property. Here we have a world to choose from. This is a collaborative effort, and again, happy to share because you guys have motivated me and opened my eyes to a completely different strategy. By the way, I have added all kinds of things like a stop loss, like a trailing stop. As you mentioned, Floyd, a week ago, your sell rule 1 and sell rule 2, 1 day drop and all that. And I've found that just reduces the overall return.
Sure.
So in fact, you just got to have a wider tolerance for fluctuation.
And Pete, if I might ask, do you find that you have a different strategy for SOXL compared to how you would trade TQQ, or does your strategy work across the various levers ETFs?
Great question. I started with TQQ because that was the bread and butter for all of us. I then leveraged the SOXL and I included TECL. And I did not go into the 4X as you described, but the results are significantly stronger. No, it doesn't much matter. It is the underlying that varies depending on how much leverage there is on the underlying to determine how much profit or loss you're going to get, basically based on the same 3 signals, entry and 2 exits.
And I like the fact that you didn't have a significant number of trades, and so that appeals to me personally. And so please share by whatever means you would like to share, because we're always looking to learn. We're always looking to improve.
If you, yeah, Pete, if you can send an email, I'll put my email address in the chat. I would love to get an email from you describing what you just described, like your rules and whatever else you can send us. That we
And
can
is some of this, Pete, did you pick this up maybe from Dennis Welburn a little bit?
Yes, indeed. I used to present with Dennis Wilburn years ago. Yes, I was heavy into commercial real estate at the time. I was giving it a global perspective as to what the financial markets were doing with Dennis's meetup groups here in San Jose. But yes, that's exactly where I learned TSI.
Got it. Okay. Yeah. Because you were using words that sounded familiar, because Dennis has presented to our group each year about February and March for 3 years in a row. So he's shared some of those same words with us. Okay, great. I really appreciate your comments. And if you can
Floyd, if I may, can I throw one more thought here? My name is Paul Riggs. I'm also new to this. I'm also from Houston. With regards to your question, I believe it's already been asked and answered. A gentleman by the name of Mike Turner runs rule number 1 of investing. And what he looks at is roughly a 200-day moving average. And if it drops below that, he goes to cash and or double short. And just eyeballing his numbers here, it's about a 30% improvement over whatever you're getting. When you look at these V bottoms that happen, these didn't happen until about 3 or 4 years ago because of all the algorithms. When they drop down, they kick back out the same way. It's like an elevator down and an escalator up.
Right.
It used to be a nice rounded bottom, which is why everybody was looking for the old cup and saucer or handles looking things. But now you get these V bottoms rapid down and really a ripsaw back up. But his procedure for going to either a short or a double short of the market during the downturns would dramatically improve your rate of return.
And that guy's name is Mike Turner?
Mike Turner is the Rule 1 of Investing.
Rule 1 of Investing.
It's the name of the book. And you can catch it on Amazon cheaper. If you go to any of the money shows, you can actually go and have him autograph, buy one and have him autograph it for you.
And have you then actively traded that method?
I utilize it as a mechanism for finding out when the market's going in the crapper, and I go to 80% cash or more short.
Okay. Thank you for sharing that, Paul. I appreciate
So
that.
that might answer your question pretty quickly and how much it's worth to you.
Yeah. Well, in this, what I'm learning, I did my first trade. You guys aren't going to believe this. I did my first trade 63 years ago. And I've been on a constant learning curve the whole time. I'm still learning. I'm still looking. Plus, the market is not the same as it was when I started. It's not the same as it was in the 80s. It's not the same as it was in the 90s. And so what worked back then may not work now. And so we need to be flexible here. So but thank you so much, Paul, for sharing that. Anybody else out there before we sign off? We've been going for 2 hours now. Looks like that might be it. Oh, somebody got a comment?
Hey, Floyd, this is Yogesh. This is in regards to your SQQ or inverse strategy.
Yes.
You said that it's not working. And the reason it's not working is because the nature of how market behaves when it goes down. And the stops that you have are very wide. So for SQQQ, if you want to trade it with the same parameters that you have for stochastics, you can use the same parameters, but you need to change your stops and make it smaller. So that way, when it goes up, you catch the trend and then get out before waiting for 28% stop or something like that. Because by the time it comes down, you won't make any profits.
Yeah, you can have your head handed to you if you're not careful. So thank you. Thank you.
Yeah, we've experimented with all sorts of different settings for the inverse, but still they haven't ended up being profitable. Because you're right, the inverses themselves act really differently than the regular ETFs. So what I'm doing is working right now on a strategy to trade, say, SQQQ based on the movements of QQQ. So not based on its own movements, which can be awfully, if you look at a chart of SQQQ, it's not like a flip. It's not a flipped upside down version of TQQQ. It looks really different. And so it's acting differently. But that's one thing I'm experimenting with now is basing it off of QQQ and just selling when I would, instead of selling when I'd be buying TQQQ and buying when I'd be selling TQQQ. That kind of doing the inverse action, but based on still the LETF. And that's seems to be the most promising for me so far, but I am still totally open to new ideas and different ideas that people have actually tested and found good and are finding good results with.
Philip, did you have a comment?
No, negative.
Okay, that's cool. That's cool. This has been great. I love the participation, the enthusiasm, the suggestions, giving us ideas on how to improve, and the market, as we said earlier, and by what you know by IBD Live or what you read in the big picture, the market is offering us some potential opportunities right now. You always want to be careful, but this is a presidential election year. Historically, presidential election years, the market ends higher than it does on the beginning of the year. I think, in fact, I think that may be almost a perfect record. And on the year when the incumbent, it's his first term, I think it's even a larger propensity for a presidential election year to be a positive year. But there's always stuff that can go on. I mean, if Iran decides to nuke Israel, then all bets are off, for example. And every year is different. And so we can't just always look at charts and books and history and say, if it's a presidential election year, it's guaranteed I'm going to make money. No, there's no guarantees out there. But the other thing I heard a pretty smart guy once say is that every year there are multiple opportunities to change your life financially, and we just have to find those opportunities and then trade them smart. So I think IBD helps us a lot. I like IBD Live. I watch that every morning. I read the paper every weekend. I look at the big picture every day, and it feels like it gives me a leg up, and I'm smarter than if I was doing this on my own. I promise you that for sure. So thanks, everyone. Have a great evening. I'm glad that Reggie stepped up to the plate. He's going to do this for us at a minimum June. He's probably going to do June, July, and August. And we're going to continue to do our back testing and looking for ways to improve. And I hope everybody has a great summer. So we're going to sign off, and thank you for all 66 of you that hang in for the 2 hours, especially you guys on the East Coast. Go to bed. Okay, goodbye.